Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, when news that August data out of China indicates slowing growth there. Firstly, however, American consumer prices rose faster, up 1.9% year-on-year in August, from a jump in the cost of petrol and rents, signs of firming inflation, which is at a 7-month high, and which has boosted the probability of an interest rate increase from the Federal Reserve in December. However, that rise ate into wage gains. Meanwhile, the number of jobless claims fell after the previous 2 weeks' jumps following major weather disruption in parts of some of the southern states. In China, Bitcoin exchange BTC China said it would stop all trading at the end of this month, setting off a further slide in the value of the cryptocurrency that left it over 30% down from the recent highs earlier this month. And foreign direct investment into China rose 9.1% year-on-year to $9.6 billion in August, according to data released overnight from their Ministry of Commerce. That is a big turnaround from earlier outflows, so now they are all square. In the first 8 months, FDI has dropped just 0.2% year-on-year to $84.1 billion. But there are some worrying signs that the usual areas of growth are slowing in China. Cement production is down sharply, down 3.7% in August from the same month a year ago. Meanwhile, retail sales rose 10.1% year-on-year, but that was the slowest gain this year. And industrial production rose 6%, extending a sharp 2017 slowing in growth. Tellingly, electricity production grew only 4.8% in August year-on-year, the slowest growth rate in a long time. Oddly, a big real estate listing platform, Juwai.com, is apparently claiming that Chinese authorities are about to loosen their capital control rules to permit easier funding of overseas real estate by Chinese citizens. They may have inside information, but there's no official confirmation of this. And the flow to New Zealand is unlikely to be large, as market gains in China are still substantially positive, whereas ours have evaporated. It is hard to see why Chinese investors would forsake those for our declines. The OECD is reporting that G20 growth is rising, up 3.6% per annum in the second quarter of 2017. In the UK, the Bank of England signalled it is preparing to raise interest rates within months to restrain accelerating inflation there. In Australia, employers have taken on an additional 325,000 staff in the past year, most of them full-time workers, in the strongest burst of hiring since 2000. In New York, the US Treasury 10-year yield is still rising and is now at 2.20%. The price of crude oil has risen just slightly today, and now just over $49.50 a barrel, while the Brent benchmark is just over $55. The price of gold is down, however, down $4 to $1,324 an ounce. And the Kiwi dollar has also slipped. It is now just on 72.2 US cents. On the crossroads, we're at 90.3 Aussie cents, however, and 60.5 euro cents. And the TWI is now at 74.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.